All right, recording started. I think it's also our intention to maybe get a pre-recorded version of this as well. Oh, a transcript. That is a lot. Okay.
All right, maybe we should get rolling. It's 10:33. What do you think, Ethan? Let's get going.
Yep.
Well, hello, everybody. I think I know everyone on the call. I'm Mark Hopkins. I'm the Executive Director of Chicago Central Area Committee. Thank you for being here this morning on a Friday. Thank you to Ethan Lassiter and our colleagues at the City of Chicago for offering to do this. There's a lot of news around this bond offering. There's excitement and what's the other word you would say? I got interest is probably it. I've had a lot of people call me, and it's been interesting to read through all the different pots of money inside of it. So I'm going to just turn it over to Ethan, and we'll get started with the details, and there will be plenty of time for questions as we go through toward the end. So don't be shy when it comes time for questions.
Yep. Sounds great. Thank you, Mark. Thank you, CCAC. Thank you to, familiar faces and all of that. I'll pull up the deck right now. So again, just thank you for taking some time this morning. I'm Ethan Lassiter with the mayor's office now. Um, and as Mark was saying, this is part of a kind of larger outreach, larger socialization about this bond. There will be continued meetings like this, probably in some different formats and some kind of broadly more public formats as well going forward. Specific to the bond, if and when this is passed by City Council in April on current trajectory, there will be more specific program presentations from departments related to their work, obviously. And again, I'd like to keep this pretty informal. So it's a little tough to monitor kind of the chat or hands, but I will try to. And please kind of interject, or I'll try to stop at different points for those questions. Either way, the whole presentation will not take a ton of time, and then we'd like to focus a lot on kind of Q&A and any other comments.
Ethan, it's Andrew Broderick. I can just help to monitor the chat for you
Yep.
too. I'll just
Sounds great.
Yep. Cool.
And please interject or jump in whenever there's a comment. So broadly, as we're going to run through, really, what is this bond? Why are we doing it now? Maybe a little bit less needed for this audience, but what is TIF? The TIF to bond shift, and then kind of larger Q&A. Would love to spend some time going through. So at a broad level, as many of you may have seen, this TIF is a 5-year, $1.25 billion bond issuance dedicated to affordable housing and community development work. The bond proceeds are split 50-50 between the Department of Housing, DOH, and Department of Planning and Development, DPD. That equates to obviously $625 million for each department over 5 years. That's $125 million annually to each department. And again, as per the bond ordinance, these bond proceeds are only going and can only go towards housing and community development programs that are included in the bond book and kind of summarized in this presentation, but listed in the bond book. A change in either what we are funding or kind of beyond anything else would require an act of City Council, so that's not the intention of this bond. And again, just emphasizing that the bond book and related information is available and will be available on chicago.gov/development bond. I believe the bond book is there right now. The financial model or the projection should be up there shortly. And this presentation has been iterated on, but a version of the presentation will definitely get on the website as well. And we're glad to send it out after this call. So jumping into, there's the financial tool and there's the program that we're actually doing based on this funding source. So this is what we're doing with the money. To the Department of Housing, there are kind of 3 large buckets that I'll run through very quickly at this higher level. A large portion of funding is focused on how do we help increase construction, renovation, and retrofitting for affordable rental housing, multifamily housing. On the homeownership side, there's a lot more support for purchase assistance, homeownership repairs, preservation, renovation, kind of stability and maintenance with things like condos and trouble building initiative, and then climate retrofits as well. And then a smaller pool specific to SRO preservation around homelessness and permanent supportive housing. On the economic development side, on the DPD side, more or less, a large chunk of this is going towards the Community Development Grant Program. As some may be familiar, DPD has a larger intent and has been over the past couple of years shifting to this universal application and a kind of more full tent community development grant program, so that when a applicant or client is coming to the city, they don't necessarily need to specify, I want TIF dollars versus NOF dollars versus CDG dollars. There's a universal application on the front end, and DPD can help coordinate where that money goes. It's also, I want to note, there are programs that are specifically in TIFs, things like SPIF, Small Business Improvement Funds, that can also or will also be a part of this work as well. You might be familiar with things like NOF small and NOF large. Obviously, this has a similar breakdown, creating a small category across a range of what would kind of be current programming, a medium category, and a large projects category. As you are familiar, a lot of that work is related to more kind of physical improvements, bricks and mortar equipment and things like that. On the kind of small business capacity building, there's this revolving loan fund that we can get it into that provides a lot more flexibility, things towards we can now do programming towards support of working capital and funding that we haven't traditionally done. And then the need for more support for pre-development to make sure that projects are viable and feasible when they come to the departments has obviously been identified as a key area. And then finally, jobs, wealth building. There's an ability to expand a lot of workforce support and training programs that currently exist kind of only within TIF districts can now become citywide programs, and then a larger initiative largely tied to kind of vacant land, but how can we address kind of that missing middle housing, a infill development strategy related to vacant parcels. So what does this all mean? Collectively, these are our conservative assumptions, but well over 5,000 new and improved homes, rental and homeownership opportunities, over 500 new and improved businesses and supported businesses, and leveraging outside dollars to create at least a $3 billion impact in Chicago. So why are we talking about this bond right now? The city is facing something we also refer to as a TIF cliff. TIF remains a critical funding source for these two departments. Collectively, they get recently, they've gotten about $300 million annually in TIF revenue. However, about a third of the city's TIF districts are going to expire in the next 4 years. That equates to almost 45 districts. And then as those districts shrink, there's less funding, but there's also a increasingly small geographic footprint in which to deploy those funds, which also can mean that TIF could become increasingly inequitable. Secondary sources are also under pressure. So we'd call these NOF and ARO in lieu fees are two other funding sources. They are important, but they are also substantially smaller than TIF. In the past 9 years, the total combined from both of these programs is about equivalent to 1 year of TIF revenue. So they're, again, substantially smaller programs. They're also subject to real estate market forces and the volatility of construction starts. So we have looming declines in key city resources, as detailed in the last couple slides. This was the impact of this decline was somewhat delayed recently by the issuance of a previous round of Chicago recovery bonds and then federal funds, both of those somewhat, COVID tied. Those CRP bonds, those city bonds are now exhausted. At the same time, as many are familiar, construction costs have risen, interest rates have spiked. So the same amount of dollars cover less amount of built environment work. So without a change, production levels will significantly decline starting this year. I'll keep this brief given the people, but so tax increment financing. TIF comes up a lot, obviously. The city has used TIF extensively as a tool to promote public and private investment. It is confined to those TIF districts, those areas where a TIF has been created. So how does TIF work? You create a TIF district that establishes a baseline assessed value for property within that area. And then if the value of property in that area increases above that base level, the property tax only on that additional value, that incremental value, is collected by the TIF district rather than the public taxing bodies. And then as the TIF district collects funds, it can then be used for redevelopment projects. Again, this can be private sector investment, commercial, affordable, industrial, but it also does include city infrastructure, schools, neighborhood development, transit, parks. Again, very briefly as a visual, the navy bar is the amount of that baseline that gets essentially frozen in what is going towards the taxing districts. That red increment is as property values increase, that red amount is what is the tax from that red amount goes towards the TIF rather than the taxing bodies. So if TIF is declining, why not create more TIFs or extend TIFs? TIF does have some challenges, obviously. It generates the fewest resources in areas where there's the most need, because market value is coordinated with disinvestment and a lot of other indices. And then eligible costs, as defined in the TIF Act, are relatively inflexible and can certainly limit the city's ability to fund projects that are most needed. TIF boundaries can also be challenging to deal with. They can be somewhat irrational. They are definitely difficult to amend, and they can certainly limit our operational capacity. So the solution is this shift from TIF to bond. Bond-funded programs can be used citywide. They create more eligible uses, including new construction and working capital. The success of bonding for the city recently has shown that we can do this in a more equitable, effective, and responsible way. And again, this is relatively innovative for Chicago. It is not innovative in the national discourse. This is a best practice used by peer cities. And again, this is obviously a benefit to other taxing bodies. This expiring amount of TIF does provide more revenue to our peer organizations, the school district, parks, libraries, everything else. And again, there's a lot of support for this, from just good governance and public finance groups to civic, nonprofit, community development, and the development community writ large. So this is a revenue neutral approach. This can be done without an increase in property taxes because the bond is only paid for with increment or the expiration of TIF districts. That additional revenue generated by the expiring of TIF districts is the source of funding for these bonds. Again, as shown on the chart on the right, the green bars is the amount of additional city revenue coming from expiring TIFs. As TIFs sunset, expire, more money that would have gone to the TIF district will come straight to just the city's general fund. The red line is showing the total annual debt service of this bond fund. As you'll notice, the green line is always above the red line. To the extent that the city would choose to not expire a TIF, extend a TIF, or create new TIFs or something, and it might impact this, we would reduce the amount of debt, the amount of bond issuance, if we didn't have the capacity to support that. Obviously, our intention is not to reduce that. So the full debt service, annual debt service, if we do issue $1.25 billion of bonds, is anticipated to be around $80 million. In out years and later years, we will generate substantially more new revenue from letting TIFs expire than we will need to pay for in this bond. So this is a right sizing of the TIF program, not an end of the TIF program. The shift to bonds does allow us to use TIF where it is more strategically needed and productive. It does allow us to sunset TIFs that have been less effective or don't support the needs of the community that they are in. There's no desire or no plan to accelerate the expiration of TIF districts. And then again, where existing TIF districts already exist, there will be funding source both from that TIF and from the bond funds, because bond funds can be used citywide. The bond has no direct financial impact on existing or continuing TIFs, and the city can continue to pursue extensions of TIF districts in areas of highest need when there's specific projects that would clearly benefit from TIF. So it's not that TIF is entirely going away, it's that we can right size it so that we're using it more effectively. So very broadly, in summary again, it's a 5-year, $1.25 billion bond. Without doing this, our ability to support housing and community development work will significantly decline. This proposal can be implemented without a tax increase, and it does allow us to just advance best practice in community development and public finance. So I'll pause there. We have more detail or can go into program work, but I want to pause for any other questions and anything that's come up in the chat or via hands.
Hey, Ethan, it's Andrew Broderick. I am monitoring the chat, and I put a question in the chat, but I was just, can you help me on the history and the timeline on TIF and how long these expiring TIFs have been in place for? Is it like 30 years or 20 years? I can't quite remember.
Yeah, TIFs exist for, when a TIF district is created, it exists for 23, we now kind of call it 24 years. 24.
Right, okay.
So 23 years, it can be extended once for an additional 12 years. Again, 23 and 12, we now kind of call that 24 and 13. But a TIF exists for 23 years. It can be extended for an additional 12 years. That gets that 35 level. Sorry, another element of your question?
Nope, that's helpful.
Okay.
I'll look to others here who are participating. If you want to raise your hand or put a question in the chat. Alex raised his real hand. Go ahead, Alex.
Thanks, Andrew. I'm Alex Oaks with HRNA, and I just was wondering, I think on one of your slides you mentioned that some of the revenue would be going back to schools and to the county when these districts expire, and of course the city's portion we can then bond for all these great things that you were talking about. Do you have a sense of like what percentage of the revenues that had been going to those districts would upon expiration be going back to the other taxing jurisdictions?
Broadly, the city is, I don't have the exact figure, it's not even a quarter of the total levy on property taxes. The school district, CPS, is about half, a little bit over half. Parks, I don't want to misstate it, but parks and libraries are single digits. So the city is 25% of the total amount of that. The vast majority of that is going towards these schools.
So this also represents a big boost to schools funding.
Yes.
Yeah. Great.
I see Raphael's Leon, your hand is up there. Raphael?
Yeah, hi. This applies more to affordable housing. How will the city make decisions about investing the money in affordable units? Affordable units are already very expensive as they are. So what is the process or the criteria to determine which projects will be funded?
So two things about that. Yeah, one, this is a funding source that does give us more flexibility, but it does go into what is largely existing programming. So both departments do have existing kind of processes to evaluate where they should fund work. That does go into an emphasis on disinvested communities, an emphasis on project readiness, the impact of a project. All of that rubric is still valid, and the departments are still advancing that work. We are actually intending to add something about that selection criteria on the website. I will also call out in the bond book that is on the website that is linked here, and we can send it out. There's more detail about each project and the selection criteria within each project. So everything on this slide, everything in this presentation or in this deck is also in the city's bond book that is on the website that details what is the selection criteria for each project. But to your point, affordable housing is difficult to build. A lot of benefits of this is that it's a lot easier, or gives a lot more flexibility to pair, a LIHTC investment or a LIHTC project with just other funding sources. It's build and preserve affordable rentals, grants, and other funding into the project. Whereas previously, often, especially in areas without a TIF, there's almost no resources to fill gaps in funding affordable housing for areas that are not inside a TIF. So this could be used citywide. There's certainly still a framework to prioritize where investment occurs.
But let me say that if the goal is to continue providing money, putting money into the LIHTC transactions, which are already running at $600,000-$700,000 per unit, that's insane. If you're going to put more money into LIHTC transactions, the city should focus on preservation, which is less expensive.
Yeah, no, valid. There's still plenty of work focused on preservation of affordable units. I'll also call out the green social housing revolving fund, which I did not get into and will need a lot more explanation from the Department of Housing, and I know they'll be kicking off a lot of work on that, does allow us to kind of on a per unit basis get some affordability at a much lower cost to the city and a much larger impact. But agree that new construction versus renovation is a very valid conversation that is not specific to the bond, that is specific to all of our department's programming.
Okay, thank you.
And this is David Scully, Managing Deputy Commissioner at DPD. I do have one thing to add. I'll, kind of speak a little bit for my DOH, partners, is that like one of the things that I think they tried to do in their portion of the bond was also focus on supporting the programs that had a lot of demand, like the, sort of roof and porch program that support home ownership and affordable home ownership, keep people in their houses, that were just honestly underfunded. Like we didn't really have great funding sources. And this has really become an opportunity to continue to kind of build up and support those programs that support all Chicagoans overall.
Go back to Alex.
Thanks, Andrew. I just had a quick question, and I don't know if you have this level of detail, but does this assume that every district that is set to expire will be allowed to expire, or is there any position that the mayor's office has taken about certain districts potentially being, where there are still potential needs, potentially being extended, or is this just sort of a general, like, as districts expire, we are quantifying the revenues that could be bonded?
No, this has already gone through a filter of identifying which districts are expiring and should be allowed to expire. There are some that will be in place or in theory could be extended, and this is already it's not a broad if all this happens. There's already been some choices about some things should still exist.
Yeah, that'd be super interesting to take a look at. Thank you.
And I believe that will be or is in the financial projection, which, again, I don't think is on the website, but we certainly have sent that out. So we'll try to get that on the website, but you can also get that to you.
Great. I see Carmen.
Hi, this is Carmen with DPD. Hey, Ethan, you mentioned earlier, and correct me if I'm wrong, projects would be eligible to use the bond and the TIF if they already are within a TIF that hasn't expired yet?
Yes.
Okay. If that's the case, what about locations that don't have TIF at all? Or would there be a separate, I guess, criteria for projects that are looking for investment? Would they be given priority given that they don't have TIF as a supplemental financial resource?
That's a bit of a department-specific question about how they want to prioritize their investment, but largely bond just gives all of that flexibility that you can prioritize what is the best project with the highest impact, not limited by the financial capacity or financial kind of geography of TIF. So that's kind of project by project, department by program, even about how do you prioritize work.
Okay, thank you.
Sorry, this question in the chat from Allison. TIF limits where the dollars can be used, bonds, are there any boundaries defined citywide? Yes, TIF does limit where dollars can be used. Absolutely, it can only be used in TIF districts. Bonds can be used citywide, as in within the city of Chicago. So again, we're removing that financial barrier about where we make investment, and it can then become a kind of programmatic decision about what's the biggest impact we can have. But we're no longer bound by or constrained by financing as a source of that constraint. It's more just what should we be doing as the discussion.
Hey, Ethan, this is Andrew. On that note, I'm wondering if, and maybe I think you alluded to this earlier around like geography around underinvested communities and thinking about prioritized areas to funnel investment. Is that something that is in the bond book or something that the city's going to be coming forward with a strategy around geography?
Yeah, largely yes. There's some detail about the prioritization within that bond book, but I think we are hearing, and we do want to provide a bit more detail in that prioritization and in that geographic prioritization. So working on it is the best answer. Yep.
And then I think just seeing the audience here with a number of our CCAC members being developers, I'm just kind of wondering a thought on matchmaking, on grants, on how will the city be dispersing and providing this incentive to specific projects?
Again, it'll be a bit specific to each program. The departments, DPD and DOH, already have kind of their process of selecting projects that will continue. That can be obviously tweaked a little bit or made more flexible through this, but that intention largely already exists and
the departments
will keep occurring, or through the spring we'll keep having that conversation.
Good. I see Raphael has a question in the chat about making these slides available.
Yep. Yeah. I will send this out later today, and they will get on the website at some point as well. And again, every sentence on this slide is also in the bond book, but in greater detail on the website at chicago.gov/development-bond, which I'll throw in the chat. But we will send those out as well. Thank you.
Other questions from our audience here?
Gary, but he's on mute.
So I have a question. When is this going to be in place, do you think?
Yep. Short answer is as soon as the bond ordinance is passed.
And the reason I ask is we're working on a TIF now. We're negotiating a term sheet. And how would that be impacted by this, if at all?
Okay, the more nuanced answer. As soon as the bond ordinance is passed, in theory, we could start allocating funding towards projects to, May 1st or the next day or something.
Okay.
With the knowledge that our ability to go sell the bonds and generate bond proceeds does not occur that following week. We'll need a little bit of delay. So to the extent that a closing on financing on a project probably couldn't occur with these bond proceeds for another maybe at least 2 months.
Oh, sure.
But we could dedicate or allocate or define what projects we're funding starting.
But it's in the next 180 days, you think?
Yeah.
Thank you. And should we consider this as we're negotiating this term sheet? Should we consider switching, or how do we know which way to go?
That is a interesting and broader question. I wonder how much of that is kind of programmatic to the departments versus is there any legal concern if our ability to talk about or promise funds if we don't have the bond ordinance passed yet, which is why I think we're emphasizing, the day after it's passed, we can start doing all of this. It's an interesting question. I think it's totally worth the departments and Department of Law figuring out.
Okay.
I want to acknowledge Greg Hummel has joined us here, board chair for CCAC. And Greg, if you wanted to mention something, go ahead. You were getting a little echo or feedback too, but I think you've resolved that by going on mute. But just let me know if you had something you wanted to mention. And you're on mute though, so we can't hear you right now.
So this is Raphael. I don't hear anybody else asking questions, so I'm going to ask one more question. So the placement of the bonds, it will take probably about 3 or 4 months to place the bonds in the market. That's not a simple task. I'm assuming that the city already started considering the issuance of the bonds and have a time frame to do that.
Yes.
And what I heard you saying is that projects that are already being considered may qualify for that money, or is it the bonds may have a provision that precludes those projects from being funded, and it will be projects going forward after the bonds are issued that would be funded, right?
No, the department can choose to, once they have the resource, put funding towards any project they would want to put it towards. There's nothing about, prior to the bond.
Okay.
Sorry, there's another element of your question.
No, that was it. I mean, it was more about the timing of the bonds and financing the transactions that are in the making right now or being considered in the future.
Yeah, and I don't want to speak for the departments. I'm not saying that they have, 10 projects lined up at this second that they're just waiting for the bond to fund. There's a larger discussion about what are they doing and when. I'm just saying they have the ability to fund or to allocate funds towards a project as soon as the bond is passed.
Yeah, because it will be unfair for those projects that may qualify, but they don't know about this program versus projects that have an advantage that they're already being considered to start allocating money for those projects. I'm not saying don't allocate money to those, but to be fair to everybody who will be proposing future transactions, that this will be a resource.
Yep, and then just emphasizing that this bond is not a program in itself. This is a more flexible financial tool, but the departments still have their programs. They still have, funding rounds and applications and things. And the bond didn't inherently create some new funding round or something that started.
Yeah,
but the departments have criteria for allocating this money, do they?
Yes.
Okay.
Yeah, and so one of the things on that, and the Economic Development Bureau has sort of switched to a universal application for this exact reason. So it's not that like, okay, you'd apply for TIF, so we're going to give you TIF. It's like, okay, tell us, what the gap is, give us some more information, and then we'll figure out kind of what financing tools make sense that, kind of are in our toolkit. So this kind of gives us another toolkit, another tool in our toolkit to fund projects. And it may be like, oh, well, actually, we have a lot of TIF in this area, so we're actually going to use TIF instead of the bond. Oh, this is an area where we actually haven't had any other financial tools, so the bond is more useful. Maybe it makes sense to kind of mix and match. I think it's gives us a lot more flexibility as a department to actually implement projects, which I think will be really helpful, especially in areas where we have low performing TIFs or no TIFs.
I'm sorry if this question was raised earlier or answered in your presentation, but what strikes me as valuable about this program is the flexibility that you just mentioned. And how is this additional capital over the 5-year term going to dovetail in a framework, thought out process where the city can marshal financial master planning around infrastructure, around neighborhoods, around industry segments? Because it seems that Chicago could be at the true vanguard of mobilizing itself in order to take advantage of the amount of money that's available from the feds in a systematic way. The ad hoc approach to TIF, where the private sector initiates a request for something, as opposed to the city really taking the reins of leadership around corridor development and any number of other ways of approaching something in terms of that which is systematic and marries with all the capital sources. Is that something a brain trust is working on within the city?
Yeah, and I think it gets to, there's definitely a kind of Chicago's fiscal position working with the CFO on writ large, how are we thinking about Chicago's fiscal position, but on our economic impact work, again, this is as you stated, a much more consistent, reliable, citywide, and equitable program. So we get out of worrying about is it in a geography, or is this funding source dictated by, a real estate cycle, and get into just, we know the funding is going to be consistent. We can focus on what do we want to do collectively. Yeah, this does free more time for that work.
And that's an area, speaking now as the chair of this committee, and I know there's executive committee members on the phone with you, we'd love to help on that. We've got a cohort of planners in the physical space. We also have a cohort of finance types. And the idea of the right infrastructure in the right place, and then the way you marry sources and uses to funding to that across all levels of government, that's something that we could really raise our hands to help you with. Again, I apologize for coming into the meeting late, but is that a subject that surfaced at all during this discussion in terms of what the Central Area Committee could do?
Yeah, I think broadly the topic has certainly come up. I don't think we've operationalized it into, specific outreach or working group or task group, but the desire is certainly there, and there's a lot more we can do going forward. Yeah, so we'll definitely be in touch about that.
Yeah, the thing that has struck me, from my vantage point of having been at this for 50 years, is there's a lot of ad hoc efforts, and they're not coalesced, and they tend to be task oriented. A specific project is handled by the Civic Consulting Alliance, and the Civic Committee is doing great work on dealing with crime and things of that sort. But the idea of having somebody take ownership of infrastructure and as a tool for economic development is very powerful. And I cite the example in Texas. Austin, Texas capped, over a mile of expressway, and they got in the game early with Texas DOT, and they got $20 to $25 billion behind that project. And how they did that is by working closely with US DOT. And sometimes the city is a separate state from the rest of Illinois, and Governor Pritzker is changing that, I think, with that Illinois intersect. But those are the kinds of things that we've got a once in a lifetime opportunity to do that with the Democratic Convention coming here. And one of the things that volunteers love is the ability to have an impact and do something quickly and focused and then move on. So I don't know how you array the opportunity with the volunteer spirit, but it's real. Mm-hmm. And again, I apologize for being late, but I wanted to get that on the record.
Yeah, no, thank you. I think I agree, and I think we agree. Well, we do agree. Yeah, Andrew.
No, thanks, Greg. I'm glad you brought that point up, and we really hadn't covered that until your arrival, so I appreciate that. And gives us good components for our discussion here across CCAC board. Allison Hanson, I see your hand is up.
Yeah, thank you for that. I think
You bet.
maybe, oh, can you hear me okay?
Yep.
Yes, absolutely. Go ahead.
Two things I think come to my mind that maybe someone here can help. One is, we have TIF districts in the Illinois Medical District. We haven't always been really sure how to access them, how to get to them. And that's, we take responsibility for that, and we want to point our developers to that. I'm wondering, does this make that easier? And as a follow-up to that, faster. Is this going to help us get that funding faster?
Yeah, I think there can be greater coordination, communication, outreach, or information about how you can talk to Department of Planning, Department of Housing, whatever is needed there. So I'll leave it kind of defer to them on the get in touch with you about doing this work better, because the TIF districts exist, as you say. The bond will exist and will be more flexible. On the question of easier and faster, the bond we do think is a more flexible, kind of easier financial product or financial resource and tool than TIF. But I also want to emphasize on a different note, the mayor's executive order related to process improvement, our work on how do we streamline our development review process citywide, which again is a bit more about our policies, our laws, and our programs and how we change that work. This is the bond conversation, or the financial tool is more flexible, but it doesn't inherently address we need to kind of get out of our own way on our development review and development process. And so we are also working on that. These are two concurrent efforts. They will certainly obviously have a lot of overlap in the community development and real estate communities. They are separate processes. I do want to pitch that. I'd love to have another hour-long conversation about process improvement that many of you are already been in, but more will be coming on that process improvement work as well very soon.
Thank you.
Thank you. I do want to be sensitive of people's time. I know we've been on for a little over an hour. Glad to take any last questions, but I do defer to CCAC, and thank you very much for your time.
Any final questions? I think that does it. Thank you very much, Ethan, for this. It's been very helpful. We hear a lot of things in the public sphere that are not accurate. So thanks for this. And please do share. You'll share the slides with us and access to the recording, and I'll send it out to the list of people who are signed up. So any final questions before we sign off? I'm seeing no hands, no anything. Very good. Thanks again to Ethan, all your colleagues at the city, and for everybody for joining us on a Friday morning. Thanks very much.
Yep. Thank you.
Very much.
Thank you, Mark. Thank you, Andrew. Thank you, everyone.
Thanks a lot.
Thanks.
Bye.
Bye.
Thank you.
Thanks. Bye.